Hi friends, this is Vara from Trading Simplified, the YouTube channel that makes stock market learning enjoyable and to learn in the most simplified way. In this video, we will learn the basics of stock market. What is stock market? Stock market is a place where one buy and sell stocks. This is also known as share market. What is share? Shares are units of ownership in the company you are investing in and provides for an equal distribution in profits in the form of dividends. Company issues share certificate to their investors. So how it started? In the olden days, people used to trade by carrying the goods in their ships and sell in different parts of the country. Dutch East India Company wanted to expand their business to many countries. For that, they need more ships. Dutch East India Company did not have enough money to buy the ships. They came out with this novel idea to collect money from the people and share the profits with them. This gave birth to the modern stock market. So how does the stock market work? Company issues shares to public to raise the capital. This is called initial public offer or IPO. People invest in the company by buying the shares. Company generates money through IPO. Company uses these funds for expansion and generate more profits. Shareholders benefit if the company is making profits. They in turn get dividends and bonus shares. Once share price moves up considerably, they can sell their shares and book profits. However, if the company is making loss, share prices fall and one can incur loss. The place where we trade is called stock exchange. At present, India is the 7th largest stock exchange. USA and China contribute to 50% of the world's stock market. By 2030, India is expected to move to 5th position. Even then, India will be contributing only 3% to world stock market. In India, still there is no awareness about the stock market. Since this is not taught at school or college level, even the educated people are not aware of the stock market. Look at China. Chinese primary school textbook may soon include definitions for terms like price to earning ratio, buy and hold, etc. Chinese government is making efforts to make children learn about the stock market. We have two major exchanges in India. One is the BSE, the Bombay Stock Exchange, and NSE, the National Stock Exchange. In BSE, we have 5,400 companies are registered in this exchange. Index is called Sensex. Base year taken as 1978 and the base points is taken as 100. The average price movement of the 30 companies decides the direction of Sensex. So, from 100 points in 1978, Sensex has moved over 39,000 points. In NSE, 1,700 companies are registered in this exchange. The index is called Nifty. Base year taken as 1995. The base points as 1000. Average price movement of 30 companies decides the direction of Nifty. So from 100 points in 1995, Nifty has moved over 11,700 points. Stock market can be classified as primary market and secondary market. When we buy directly from the company, it is called primary market at the time of IPO. When stocks are traded after getting listed in the exchange, it is called as secondary market. Who controls the Indian Stock Exchange? Securities and Exchange Board of India. SEBI controls the Indian Stock Exchange. They have laid the rules of the game. Anyone violates the rule will face penalties. Now, what makes stocks or market move? Up move. First and foremost, it has to be the performance of the company, that is the sales growth, profit margin, good order book, etc. New product pipeline, strong R&D. Not only the strong internal factors will move the market or stock, but the favorable external factors will help, like stable government and government policies, micro and macroeconomics, favorable geopolitical situation. And what forces the market down? Non-performance of the company, bad governance, no futuristic plans, unstable government and bad policies, bad micro and macros, and geopolitical issues. We will learn more about this when we cover the fundamental analysis. Now we know why the market moves up or down. When the market moves up, it is called as bull market, and when the market goes down, it is known as bear market. How to identify the market directions? We will cover this in technical analysis. When we buy and hold the stock for years, it is called as long-term investment. When we buy and hold for few months, it is called as short-term investment. When we buy and hold for 2 to 5 days, it is called as swing trading. When we buy and sell on the same day, it is called intraday trading. I have used two different terms as investing and trading. Now, what is investing? An investor buy and hold it for a longer period, aiming for a larger return on investment. His aim is to gradually build wealth. What is trading? A trader takes advantage on both rising and falling markets to enter and exit over shorter time frame, taking smaller and more frequent profits. These are few basic things about stock market. Hope you find this video useful. In my next video, we will look how to enter in the stock market, what is Demat account, how to open it, what are the documents required for that. We will cover about the stockbrokers and how to pick the right stockbrokers. This is Vara signing off till we meet in the next video. Happy learning. Bye bye and take care.